Good morning, everybody. Mike Vacchi, Princetontrader.com, here with your Monday morning pre-market webcast. Okay, so daily chart, and you can see we had this extended upper band ride that has pulled back basically to test the 9-day simple moving average on the continuation chart. It's been a 3-day steady march higher, especially the last 24 to 48 hours. You can see Thursday, they bought the dip right off the open down at 26.25. We did matching lows at the weekly pivot, last week's weekly pivot, 32.5 here and here. Since then, we had that little gap up Friday. Aside from a very small pullback, it's been a very steady walk up. You can see the hourly midband and how the hourly midband has supported price, especially in the last 4 hours or so. The new weekly pivot comes in at 26.48.17. One of the very basic rules we have, is that whoever controls the weekly pivot, Sunday, Monday, Tuesday, into Wednesday, tends to get directional days Thursday, Friday. Things got directional. They reestablished weekly pivot as support. You can see that early in the week, the Bears really, the Bears had their chances. They had an all-time high come in Monday, all the way back to the weekly pivot that held a lower high, then the break, okay, trading down to that 26.20 area. The issue became when it came back in the overnight, they gave it up. And when they gave it up, they got it back again. But after the second time they screwed up, you had your matching lows, and the walk-up was on. The fact that they were able to take it down as much as they did continues to demonstrate to me that this market is more two-sided than a lot of people think. And that two-sidedness is going to continue for the rest of this month into 2018. It's not going to be, the Bears are going to have their moments. They are going to get to have their moments. Whether those moments are sustainable is another matter, but they're going to have their moments. We will spend some time below the weekly pivot this week. Whether the Bears can convert it into resistance, I don't know. They didn't last week. They tried a couple of times. But we're going to continue to have these battles because volatility seems to be a little more two-sided than it was, say, in the earlier part of the fall into the summer, which is a very one-sided discussion, and the only side of the discussion that you really needed to be on was the bullish side. Hang back, buy dips, it walks up. Now you can sell some rallies, you can buy some dips, you can play at both sides because you can have a little more confidence that the Bears can get things done, at least for a tradable period of time. Not forever. We're not going down to the to the 200-day exponential moving average, but you can get some decent shorts going in this market, but you have to respect the fact that you continue to be counter trend. You need to take your profits where you find them, get your risk out, and then when those higher lows start to happen, you need to be there on the long side. So you have to be nimble, but you can be nimble and trade both sides of this. So weekly pivot's going to be big. On the upside, the bulls have one job. They've got to make a new all-time high. That's it. If you're going to play this game, if we're going to hang around, if you're going to do 3-day pullbacks into the 9-day simple moving average, and you're going to start to build it back up and make and take out the potential lower high back here on Tuesday, all that's left is the all-time high. On the continuation chart, that's 65.25. On the March contract, that's 67.25. So that is the bulls' target this weekend, or this week rather. They need to take that out and then put some pressure on the Bears to fight back. All right, everybody have a fantastic day. I'll be out with a midday update. We'll do a wrap up. I'll talk to you then. Trade them well. Follow us over on Twitter, Instagram, and Snapchat at Princeton Trader. Check us out on Facebook and join us for a free trial at www.princetontrader.com. Trade them well.